Hey everyone, welcome back to the channel. Today, I'm diving into a topic that might raise a few eyebrows: why I'm trimming my Apple position. Yes, Apple is a powerhouse company, and it's been a major winner for years. But as investors, we need to constantly evaluate our holdings, and for me, it's time to make some changes. In this video, I'll break down my reasoning, discuss Apple's growth outlook, its current valuation, and explain where I'm reallocating my capital. If you're an Apple shareholder or thinking about making changes to your portfolio, stick around. First, let's talk about growth. Apple has done an incredible job scaling its revenue, largely thanks to the iPhone, services like iCloud and Apple Music, and other hardware innovations. But the company is now a behemoth with a market cap well over $2.5 trillion. This size makes it harder for Apple to sustain the kind of growth we saw a decade ago. For example, in recent earnings reports, Apple has struggled with year-over-year revenue growth. The iPhone business, which still accounts for more than half of Apple's revenue, is hitting saturation, especially in mature markets. Sure, they're expanding into services and wearables, but these segments are growing at a slower pace compared to the company's historical performance. Simply put, the growth story that made Apple a market darling is starting to fade. Next up is valuation. Apple is trading at a price-to-earnings ratio of around 30, which is significantly higher than its historical averages and much higher than many of its peers. While premium valuations are justified for companies with high growth potential, Apple's growth doesn't support this multiple anymore. Investors are paying a hefty price for safety and brand loyalty, but as someone who values strong returns on my investments, I see better opportunities elsewhere. At this valuation, Apple's stock price seems to reflect perfection, leaving little room for error. And let's not forget, any signs of slowing innovation or weaker than expected iPhone sales could lead to a pullback. So, where am I putting my money instead? I'm not just selling Apple to sit in cash, I'm reallocating to companies that I believe have stronger growth prospects and more attractive valuations. First, there's Booking Holdings or Booking.com. The travel industry is bouncing back, and Booking is one of the leaders in online travel services. They've shown excellent operational efficiency, and their exposure to a growing global travel market gives them a compelling long-term growth story. If you want a more in-depth analysis, check out my other videos. Then, there's S&P Global. This is a company that plays a critical role in financial markets, providing essential data, analytics, and credit ratings. It's not flashy, but it's a consistent performer with strong revenue growth and wide margins. Plus, it benefits from secular trends like increased demand for data-driven decision-making. Both of these companies offer something Apple doesn't right now: higher growth potential at reasonable valuations. By trimming my Apple position, I can diversify into these opportunities without increasing my overall risk. Now, let me be clear, I'm not selling all of my Apple stock. Apple is still a fantastic company with strong cash flows, a loyal customer base, and one of the best brands in the world. I still believe in its long-term potential, but at this stage, it's not the best fit for the growth-oriented part of my portfolio. By trimming my position, I can maintain exposure to Apple's stability while freeing up capital for other opportunities. In the end, investing is all about making decisions based on your personal goals and risk tolerance. For me, trimming my Apple position allows me to stay aligned with my strategy of finding the best opportunities for growth and value. If you're an Apple shareholder, I'd love to hear your thoughts. Are you still bullish on Apple, or are you also starting to question its growth and valuation? Drop a comment below and let's discuss. If you enjoyed this video, don't forget to like and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one.